Hi, today we'll discuss the GST, which is the Goods and Services Tax. Lately, a lot of people have been saying that it's the biggest tax reform in the country. But why so? What is the GST? The GST is a comprehensive structure of indirect taxes in the country, which is a tax levied on manufacture, sale and consumption of goods and services. So far, the current tax structure of the country is such that there is excise duty levied on manufacture of goods. Then there is central sales tax and VAT, which is value added tax levied on sale of goods respectively by the central and state governments. On provision of services like those of professionals, chartered accountants, doctors, photographers, there is the service tax. On import export of goods, there is the custom duty and its additional duties. Similarly, various states levy entertainment tax, luxury tax, octroi and certain other indirect taxes. Now all these taxes are administered by different departments of the government. There's a separate department for excise and service tax run by the central government. Each state has a separate sales tax department called its respective VAT department. Now for any kind of business owner in the country, what happens is you would require, say, an excise registration for any kind of manufacturing of goods, a VAT and a GST registration for sale of goods, service tax registration for provision of goods. And in this process you have to deal with various different departments, which requires different kind of information being provided to these departments, different kind of information or accounts being maintained for regular filing of returns with these departments, their reconciliation, which adds up to a lot of administrative cost. The GST brings all of these taxes under one umbrella, which means that if you want to run your business in India, be it manufacturing, sale of services, import, export or provision of services, all of this will come under the ambit of GST and you will have to deal with only one department called the Goods and Services Tax Department. This also removes the cascading effect or the double taxation effect of the current structure of indirect taxes in the country. While we'll discuss the cascading and double taxation effect in another video subsequently, to tell you simply, in the current structure, there are taxes on other taxes. For example, a VAT dealer or a wholesaler or a retailer who purchases goods from the manufacturer adds VAT or sales tax on the excise duty that he is already paid to the manufacturer, which means that his VAT is calculated on not just the value of the goods that he purchased but also of the excise duty. So there is tax on tax. The GST through its system attempts to remove this. It will also bring in uniformity of taxes across the states, because so far different states were levying different rates of taxes on, say, the same product. With the advent of the GST, there are 4 specific rates given. There's 5%, 12%, 18% and 28% depending on the kind of goods that you're trading in. Now under the GST, each state will be levying the same rate of tax on the same kind of good. And while you may require state kind of registration depending on where your offices are, but the whole department is managed centrally. So it's a great ease in doing business for the country. Hopefully this should in the long run reduce prices of goods and lead to GDP growth as claimed by the government of about 2%. But if not that ambitious a rate, then maybe about 0.4% GDP growth definitely.